Very good morning to you. It's Nick here, wherever you are in the world today. I hope you're fit and well and feeling good. It's a hot day where I am in Southeast Asia, in the Orient, in the Far East here. Got the window open and looking at a swimming pool. The horizontal line here, the yellow one, and this one here, the yellow one, are positions that the banks basically are thinking of shorting the currency pair. I've got a pending order for 78.80. That's where I would like, which is not exactly the same as a bank, but it's the position I would enter the market on. As I say, I use the banks as confirmation of the direction, and they're all short. There's three of them which I have confidence in are short the Aussie US. And I'm going to go for a 95 pip move. I've got two positions on, so I could end up with 190 pips, which would be a very nice trade situation. And I'll have to wait a few days for this to develop. If it goes the other way, then obviously I'm going to lose. Now, my data feeds include currency positions taken by major banks who are committed to seriously large Forex positions in the market. And I can see the three major banks who are short the Aussie US from various different levels. And as I say, I use this information as confirmation for my trading entries. So the quality of my confirmation is rather high in my view. I believe that the resistance of 78.80 is a high probability trade. Okay, and you've got to think in terms of probability. The fundamental reasoning for the short, and this is important because we must combine good risk management, trade allocation, the amount we put on a trade, along with technical analysis and fundamental reasoning. The fundamental reasoning for the short is that the US strength trend appears to be resuming, and the Aussie in particular appears weak due to global disinflation and commodity fears. And Australia needs to sell commodities and remain competitive because this is a major part of their economy. And in addition to this, the continued US economic recovery and the Fed monetary policy normalization, there's a mouthful to say, will increase US dollar strength, at least in the short term and in a suitable time frame for our trade, which for us is the most important point. And there's also some bad news out for the Aussie US in that the Australian exports to China have fallen by 35% according to one news source, and which in my view is a considerable amount. And the Australian government, via their central bank, will want to keep the Australian dollar weaker in order to remain competitive and assist in selling their commodities, which is essential for the Australian economy. And this all adds weight and reasons that justify and support the short position. Okay, so that's my reasoning behind it. So we are looking at, let me just get my timer up here. I've been in this trade about a day, or rather I put a pending order for this trade, and it has not triggered, and I've been waiting about a day. And I'm quite happy to wait another day or so. It doesn't worry me at all. If the market gets there, great, and I'll stay in it for a few days if required, because I'm going for a big move on this. So that's how I would look at doing trades. I use bank positions as confirmation for my triggers. From me, Nick, I hope you found this interesting. You can leave some comments. Take good care of yourselves, and I'm going for a swim. All the best to you, and thanks for listening.